Good day to everyone joining us from around the world. Whether you're waking up midway through the trading session or winding down for the night, welcome. On behalf of the entire WeMasterTrade team, we're truly pleased to have you here with us for this global live stream session. My name is Paul, and I'll be guiding you through this exciting 2-hour journey as your host. Today's live stream is not just a presentation, it's a conversation. It's a window into the engine room of one of the most fast-growing and forward-thinking funded trading firms in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who have helped shape what WeMasterTrade represents today: skilled traders, mentors, and role models within our community. First, let me introduce the ever-composed, always insightful Raf. Welcome, Raf.
Thank you so much, Paul. Hello everyone, and thank you for spending your time with us. I'm truly looking forward to today's sessions. And there's so much to cover, not just about trading strategies or rules, but about the full ecosystem that WeMasterTrade offers. From how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trades, it builds traders.
Absolutely. And next to him is someone who brings sharp analysis and clarity to every chart and conversation. She's strategic, she's sharp, and she's a real force in our trading space. Please welcome Helen.
Thank you, Paul, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excited me more about today is that we want to unpack everything, not just what WeMasterTrade offer, but how traders can truly take advantage of its part of our system. From packages to promotion to scaling and long-term profit sharing. If you ever have a question and even doubt, today is the day to ask them.
And that's exactly what we're here for. Whether you're brand new to WeMasterTrade or already a part of our funded trading program, today's stream is going to give you the full picture, not just the highlight reel. Over the course of this session, we're going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and what we're doing things different from traditional brokers or broker firms. Now, I want to be clear, this isn't just about sales, this is about understanding. We want you to know what you're signing up for, what kind of structure supports your journey, and how you can use that structure to not just succeed, but scale.
And speaking of structure, we'll begin by sharing the story behind WeMasterTrade, how we work from at a funding project, not a broker, with a very important distinction. Unlike brokers who profit from volumes or a loss, WeMasterTrade is built on the belief that your society is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from that philosophy flows with everything we offer, especially our trading packages, which we'll be discussing in detail. We will explain the logic behind each one, what kind of traders they ever looked at our packages and thought, which one is right for me. Today we will answer that.
And more than that, we'll also do a live comparison between packages. We'll break down pricing, account size, maximum drawdowns, consistency rules, and even payouts, side by side, to help you make a fully informed decision. It's one thing to see numbers on a website, it's another thing to understand the intention behind them.
Right, and when you understand the packages, the next question is always, how do I come clear on while trading? And we will move naturally into discussion trading rules. Which currently is one of the most important part of today's session. We will learn what is the daily loss limit is, how it's calculated, and why it includes both low and floating profit and loss, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we will even the average command understanding about trades and trade sizing and repo trade policy.
And we won't just explain rules in isolation, we will explain them in the context of live trading decisions. I will share some personal examples of mistakes I made when I first started trading under funny conditions and how I adjusted. Because rules aren't meant to restrict you, they are here to protect the integrity of your growth.
And while we're on the topic of helping you succeed, we'll be guiding you through our current promotion plan, including limited time discount codes, trader support campaigns, capital opportunities, and how to properly qualify and submit proof. We have some amazing responses to our promotions, but also some confusion. So we'll be showing you exactly what to do, step by step.
And from there, we will transition into the discussion on a scale-up plan, which I personally think is one of the most underrated part of WeMasterTrade offering. Many people don't realize this, but we have a structural growth pathway in play. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting a funniest one, it's about evolving into a six-figure funny trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit sharing model. This is the heart of what makes us different from prop firms. When you trade on a funded account and generate profit without breaking rules, we share the profit with you up to 90%. But there's more to it than just the percentage. We will explain the full payout circle, thresholds, and timeline today.
Now, I know many of you watching today aren't just traders, you're also educators, influencers, or people with large network. That's why we're also taking time to explain our affiliate program, and we'll do it transparently. We'll walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payout, including a detailed explanation of the two referee rule and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the term, and build long-term income stream.
So, as you can tell, this is not just a surface level stream. We're diving into everything: packages, rules, promotes, scalable paths, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want this to be interactive, not just informative. So if you have questions at any point, please drop it in the chat. Our moderators are watching and we will answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry, we'll leave timestamp and some right below, and you can always reach out to our team with any follow-up inquiry. Our support team is incredible, and they really care about helping traders succeed.
To wrap up this welcome, I'm glad to say this: WeMasterTrade is not just a platform, it is a commitment to build real traders, to create fair, structured, and scalable pathways for people around the world who are serious about trading as a profession, not a game. So, if you're here to grow, to understand, and to take action, you're exactly where you need to be. Let's dive into the journey together. Let's begin, and once again, welcome to WeMasterTrade LiveStream. Okay, so thank you once again for being with us today. Now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you a full picture of who WeMasterTrade really is, what we believe in, and why we've built this platform the way we have. Because when you're putting your trust and your trading into a company, understanding its philosophy isn't just helpful, it's essential. And so, business segment is about origin, intention, and impact. It's about how WeMasterTrade began, what values underpin the firm, and how those values translate into real tools and outcomes for traders like you. And to walk through that, I'm charged, as always, to people who live and breathe these principles, Ralph and Helen. Let's start at the beginning.
So, thank Paul. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many platforms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital, regardless of their background, locations, or financial situations. So we were founded in 2022 as part of the WeCapiTrade Group, headquartered in Vancouver, Canada. While WeCapiTrade built its name on signal sharing, investor networks, and copy trading tech, WeMasterTrade was designed to serve a more focused visions to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to know WeMasterTrade is not a broker, that not just a label, it's a fundamental difference. We don't profit from spread or commissions. Our success is directly tied to the success of our trader. That's why everything we build, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital rate, or we give you the roadmap, you bring the skill. But we also know that skill alone isn't enough, which is one of our funding principles is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structure. That's why we invest heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And the academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk calibration and multi-asset trading design. The WeMasterTrade Academy isn't just about theory, it's about implementation. We design the curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to your funding account. And to ensure that our system and content meet global standards, WeMasterTrade is proud to hold an ISO 21002 2018 certification, which confirms that our educational products and trader development programs meet rigorous international criteria for quality, structure, and learner engagement.
So that certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called brokers come and go, WeMasterTrade has positioned itself with real operational stability, compliance frameworks, and internal accountability. We're not here for a season, we're here to help build careers.
And we have seen that commitment translate into real story. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, and South Africa, all talking about how WeMasterTrade helped them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with the retail broker. They talk about finally being able to trade without the emotional burden of tracking personal fund. And we had a student become full-time trader. We had women re-enter the finance world after career break. And we had a young professional from underbanked region finally access the markets with a funding account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog session where our team of experts and educators share weekly insights, trading psychology breakdowns, market reactions, and platform updates. We believe that learning never ends and we keep our traders informed. But let's also talk about culture. What makes WeMasterTrade different isn't just the product's offering, it's the community mindset. We actively promote trader integrity, respectful competition, and knowledge sharing. Whether you're in a Telegram group, watching our YouTube series, or engaging with us on live support, you see that we actually listen.
So, and I will speak honestly here, in many platforms, the trader is just a customer. At WeMasterTrade, the trader is the product. Your performance drives the business, your voice shapes the platform, and your consistency determines how far we can scale together. That mutual accountability is rare, and it's something we are proud of.
And if you ever doubt whether this part is real, whether the trading career is truly within risk, I encourage you to read the testimonial, take a look at our funded account and connect with people who are going through the system. The stories are real, the capital is real, and results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. We're here to challenge the status quo of trading success, to build a system that reward performance over promotion, and to create real, scalable income opportunities for traders around the world, regardless of their starting point. This is more than a platform, it's a trading movement, and if you're ready to be part of it, today's live stream will show you everything you need to know. Thank you, Brad and Helen, for the deep and honest walkthrough. Coming up next, we're going to take this foundation and connect it directly to our actual offering. That means we'll be discussing all the different account packages available at WeMasterTrade, how they differ, who they're designed for, and what kind of results you can expect from that. Now that we explore who WeMasterTrade is and the principles we stand for, it's time to move into one of the most essential parts of this live stream, an in-depth discussion on our account packages. This is where it all begins for most traders, choosing a structure that best aligns with their goals, their style, and their current skill level. And when we say packages, we're not just talking about dollar figures, we're talking about frameworks. Each package at WeMasterTrade represents a different pathway toward growth, and today we'll walk you through all of them, what they offer, how they're structured, and most importantly, who they're designed for.
Exactly, Paul. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we build two distinct product lines for traders, the Challenge package and the Instant Funding package. Each line includes a variety of account sizes and configurations because we know that traders come with different strengths, risk appetite, and timeline.
And let's begin with the challenge model, a two-phase evaluation system built for the trader who want to grow their skill before being allocated capital. It's structural, fair, and has become the most popular rule for new traders entering the WeMasterTrade ecosystem.
So in the challenge model, you begin with a simulated account and your goal is to meet specific profit targets while staying within strict but reasonable risk parameter. These are three stages in total, phase 1, phase 2, and then the funding stage.
Take for instance our $10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break it down phase by phase.
So in phase 1, you will need to achieve an 8% profit target, which is 800 without breaking a 5% daily loss or 10% overall loss limit. You will have unlimited time to achieve this. That's a key difference from many brokers. We don't pressure you with deadline.
And when you pass phase 1, you will move to phase 2, where your profit target drops to the 6%, that's 600. The risk will remain the same, and here's something unique. In phase 2, you already start as receiving a 30% profit share if you exceed the target.
Finally, when both phases are clear, you enter the funding account where you trade with real capital. There's no profit target and your profit share jumps to 90%. That's one of the highest in the industry.
And this account is ideal for newer trader or experienced trader who want to start with lower ratio and learn the system. If you are still refining your strategy and want to get feel for WeMasterTrade risk framework before scaling, the perfect package to begin with.
Now, for those who are confident in their strategy and want to start with a larger account size, we offer 25,000, 50,000, and 100,000 challenge packages. The structure is similar to phases, it's in 5% daily and 10% total loss limit, but the profit targets scale proportionally.
So for example, in the 50,000 challenge, you will need to hit $4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the leverage remains the same, 1 over 100, giving you room to adjust position sizing.
And 25,000 to 100,000 challenges are ideal for traders with a more capital management experience, especially those looking to the eventually scale into the larger funding account. If you already part other prop challenges or have a strong verified trading history, this is a good step up.
Every challenge package comes from with a one-time fee. For example, just $45 for 10,000 challenge. This fee is refundable once you become funded with minimum performance conditions. And if things don't go your way, you're eligible for 30% reset discount to start fresh. So what if you don't want to go through a challenge at all, but instead want to access real capital immediately and get paid based purely on results? That's where our instant funding packages come into play.
And this is where WeMasterTrade truly set itself apart. Our instant funding model is designed to give experience. Giving trader the chance to trade real capital from day one. No evaluation, no demo stage, just pure play trading backed by structured, fair and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences, and goals. Today we are going to walk you through each of the 5 main instant funding package: standard, 510, 510, 510 WC, and customized. We will compare the detail, but more importantly, we will help you to figure out which package is right for you.
Let me set the scene quickly. All of our instant funding packages give you live trading access from day one. That means no challenge phases, no evaluations. You pay once, follow the rules, and you're trading live capital. And every account, no matter the size, includes no time limits, up to 90% profit share, scale plan to work 1 million. Support for EAs, swing trades, scalping, and even HFT. Now, let's go package by package. And as we will, Raf, Helen, I want you to chime in with your voice. Who should actually choose which one, and what kind of traders you think succeed with it?
So let's start with the standard package. I always describe this one as the best friend for traders who just want stability. You better get up to 200,000 in capital with a very manageable 4% daily loss and 3% month loss limit.
And it's like that scam that the account that doesn't put you to overdrive, and with the profit split up to 90%, there's trigger earning potential even if you take a slow and steady approach.
And how about commissions?
Competitive across the board. Forex at $4 per lot, gold at 4 per lot, indices at 1, and stock at just 0.07 per lot.
And everything it allows: news, trading, scalping, weekend holding, EAs, SFT, you name it.
So, for the audience, if you're someone who trades regularly, understands your strategy, wants a full range of assets, and plans to play the long game, this is your sweet spot.
It's perfect for intermediate to advanced trader who already know their ass, but you don't want to stretch with a target-based challenge. And if you ever had an account low due to the unrealistic rule, you will find the standard model refreshingly fair.
I would also say it suits swing traders. The 4-6% risk profile gives just enough flexibility to hold multi-day positions, especially with weekend holding fully allowed.
Alright, moving up a gear, let's talk about the 5-10-10 package. Same capital ceiling, up to 200,000. But you now get a 5% daily loss and a wide of 10% overall limit. Why does that matter?
That execution is massive for traders who scout into position or take multiple try per setup. You got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you still get full support for scalping. EA's new trading is very trader friendly.
And this is bad for day trader, especially though trading asset like NADA or gold that's move fast. You got the task in today's strategy and just need some regretting room within your package.
And also for traders who want structures but don't mind having that profit target, the clear milestone motivates some people, especially if they are pile oriented.
Now, here's a personal favorite, the 5-10-0. You get paid 5% daily and 10% overall loss, but no profit target. None, zero.
And that's a blessing for high precision traders. You are no longer chasing a number, you are just focused on protecting equity and growing capital slowly and safely.
This one is loved by low frequency quick trader and sniper. If you enter from 8 or 5 trade a week, with your space, you're not personalized for patience, you actually reward for it.
So who's it for? Veterans, swing traders, risk-conscious traders, people who prioritize consistency over speed. If that's you, you would try here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly to their home.
Now, for the rule breakers, or rather, those who don't want to be evaluated on how even their profits are, the 5-10-10 LPC removes profit consistency tracking, right?
Exactly, 7 or 5 or 10 rig rule 5, but you're not required to keep your profit growth smooth.
That said, trade copiers are not allowed in this one, so it's for manual traders only. And you need to trade responsibly, but for aggressive traders who sometimes hit big spikes, this is the place.
And who is for? It's perfect for high-risk reward trader or anyone who had an issue with consistency rule at other firm. You trade how you want, just give it inside the raw down box.
And last but not least, the customized package. This is WeMasterTrade saying, you know what you need, let's build it together.
So you can adjust daily loss, overall loss to your liking, plus you can fund up to $400,000 more than any other account.
It's premium, flexible, and come with all trading style allowed, including EAs, new trading, weekend holding, NFT, and more. And who is for? It profile for top-tier professional. It has fund trader, signal provider, high volume trader, anyone with a specific structure in mind. The market will let you build it.
So I always say if you try all the model and nothing quite fixed, build your own blueprints with customize. That freedom is rare.
To sum up, every instant funding package we offer come with clearest parameters, fair commission, deep market access, and real profit potential. There are no time limits, and payouts start as early as 1 day.
And no matter your strategy, scaling, swing, ongo, or mono, there's an account that aligns with you. The key is picking the right one now, so you can start building consistency from the start.
And if you're ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dream. The right is always outperform the bigger promise.
Up next, we'll walk you through exactly how to protect your account, avoid breaches, and understand the key risks and consistency rules to power the entire platform. Alright traders, now that you've seen the packages, let's talk about the part that either makes or breaks your account. That's right, it's time to dig into the trading rules and how to actually stay compliant once you're funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And number one reason traders lose their accounts, it comes down to one thing: the data loss limit.
Yeah, the rather they lot. It's the one rule trader think they understand until it kicked them out of their account at 3:17 p.m. on a random Tuesday.
But here's the good news, once you understand how it works, really works, it becomes one of your best tools for risk control. So today, let's break it down from top to the bottom.
So, what is the data loss limit? Also called maximum daily loss.
So in short, it's the maximum amount of loss you are allowed to incur in both floating and closed trades on any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and is what trips a lot of people up.
Let's walk through a live example. Imagine it's the start of day 5. Your balance is 105,000. Your equity, however, is higher, 107,000, because of open falling profit.
So if you are on a 4% daily loss limit, we calculated for of the higher number, 107,000.
So 4% of 107,000 is around 4,000. That means your equity for the rest of that they can drop below 102,000, and boom, the account is gone.
Right, and I think it's important to point this out. The system isn't waiting for close, it's a real time. Even if your trade is falling loss and you haven't closed yet, if your equity dips below that threshold for even a second and doesn't.
Now let's reverse it. Say at the start of the day 7, your balance is 100,000, but your equity is 99,000 because your open trade are slightly in loss.
So since the balance is higher, we base the 4% on the initial balance, so $4,000.
So now your equity must stay above 96,000 throughout the day. If it dropped to 95,999, auto liquidation kicks in. no warning, no margin call.
And what happens if you break it? The system will send a market order to close all trades. Everything liquidates. Your account is disabled, and you can trade again unless you purchase a new package.
And here's the kicker, the auto close happens when the system detects the threshold was crossed. But due to market fluctuation, your final P&L might look worse than the actual threshold. That's because the system executes a closure based on your price slippage at the time of liquidation.
So even if you only intended to take a 3,900 loss, was slippage spike involved on that stock, and suddenly it's 4,200. That's why we say don't ride the edge.
Alright, let's talk about how to avoid violating this rule, because this is where the group mindset kicks in.
First tip, know your buffer. Never plan trade to take your ride up to the edge of your limit. Leave at least 10 to 50% room below the max loss, especially in volatile markets.
Tip 2. Check your equity, not just your balance. I can strategy know most traders stare at that balance all day, but if your floating loss is grabbing your equity, you're heading toward a violation.
Tip 3. Use a dashboard or tracker. Inside WeMasterTrade, we provide risk dashboard and show your live loss status. Use them, check them. Don't rely on memory.
Also, pause trading after a big loss early in the day. If you lost 3% in the first hour of the section, maybe it's time to stop and reflect, not try to prevent trade your way back up.
Another big one, trade smaller during news hour. If you're trading gold during NFC with full lot size, you're practically breaking the daily loss rule. Cut the position size and rifle volatility.
What are the top rookie mistakes you see when it comes to daily loss?
Well, number 1, over leveraging. Traders opening positions that are 5, 6, or 7% of their account, thinking they will close quickly, but if the trade turn red fast, it's already too late.
Number 2, holding over without checking exposure. If you hold 3 trades overnight and wake up to the 60 pip gap, the daily loss could be hit before you even open your eyes.
And the third, assuming that close trades are all that matter. They're not. Remember, equity includes both floating and closed positions. The total equity line is your score.
I always say this to new traders, the daily loss rule isn't your enemy, it's your account airbag. It's designed to protect you from doing something irreversible.
Exactly, it's for discipline. You can be aggressive, but only within the box. And if you learn to trade inside that box, you will last longer than 90% of the market.
And one last note, since just about rules, it's about trust. The master trade funds you because we trust that you manage risk responsibly. The daily loss is there to protect that trust on both sides. Okay, so that's some information about the daily loss policy. Thanks for listening. So let's take a break.
Copy Trade.
Welcome back, traders. In the previous segment, we covered the daily loss rule, and if you haven't already cleared that one, you're missing out. But now we move from the daily boundary to the absolute boundary. I'm talking about the maximum loss rule, also known as your account's stop loss, the line that can't be crossed, not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rules work. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they chip away at their account and suddenly liquidation.
The mark loss rule is the last safety net. If the daily loss is your daily seatbelt, then the mark loss is your airbag. If that limit is hit, it means the account is deemed unslavable under current strategy and close immediately.
So, what exactly is the max loss rule? Let's define it simply. It's the total maximum amount you're allowed to lose across all traders for the entire account. If your equity, that is, your real-time capital including open trades, ever drops below a certain percentage of your starting balance, your account is gone. Period.
And unlike the daily loss which resets every day, this one doesn't reset, it's cumulative. You can lose 2% on one day, 3% the next, and if your total loss crosses the line, that's it.
And the percentage limit depends on your packet. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you start with.
Let's walk through a concrete example. Suppose you have an instant funding account with an initial balance of 50,000 and your max loss limit is 6%, which is 3,000.
So that means your equity can never go below 47,000 ever. Doesn't matter if you made $1,000 yesterday, the total loss from your highest point back down to that threshold is what matters.
And remember, this rule includes both close losses and floating losses. If you have lost 2,000 in close trade and you have another 1,200 floating rate, your equity is now at 46,800. That's below limit account close.
And just to be clear, it's not about the net gain or loss across trades. Let's about where your equity stands in real time relative to that stop loss floor.
So here's where it gets interesting and a little tricky. Let's say your account grew to 51,000. Congrats, you are in profit.
But your mark loss limit is still beyond your original 50,000 starting balance. So if your limit is 6%, a threshold is still 47,000. What chance is how much room you have to fall before you hit it?
Exactly. You now have 4,000 in total buffer because 51,000 minus 47,000 equals 4,000. So your profit gives you cushion, but the floor never moves.
And what happens when you break it? On your credit drop below that maximum loss threshold, even by a few dollars, auto liquidation trigger, all trade are flow immediately at the market price.
And again, like with the daily loss, if there's volatility or slippage, your account might close out below that line. That's just execution reality.
And most importantly, once it's breached, the account is permanently disabled. You need to purchase a new package if you want to continue trading. No resets, no rollbacks.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total close losses every day. You should always know how close you are to your max loss floor. Don't wait for the dashboard warning, calculate it manually.
Second, use your profit as protection, not permission. Don't treat floating profit as a green light to increase risk. Instead, consider locking in gain by reducing loss size when you have.
Third, manage your flowing rods aggressively. Even if you're positive overall, a single trade with full stop placement can take you from safety to shutdown in a few minutes.
4. Stay cool when you're close. If you're down 5% out of your 6% limit, that is not the time to double down. That's the time to step away, pause, and rethink your entries.
And the biggest mistake, underestimating floating drawdown. Traders float trade loser and think, okay, I have a two rod room, but they forgot about the 4 trade floating minus 1,800.
Second, traders who chase recovery after a bad day, they lose 4% in the one day, come back swinging the next day thinking they will make it back and instead take another 2%, boom, violation.
Third, and this one hurts, ignoring lead slippage during major news. Even with a touch stop, news schedule can get you straight through your limit.
So, mindset shift respecting the limit. The Maslow's rule is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know sees their stop loss, whether personal or institutional, as a non-negotiable boundary.
Right, it's a reality check. If you're consistently rushing up against your mark loss, the problem isn't the rule, the problem is your system or your psychology.
And WeMasterTrade, we're not just giving capital, we're teaching structure. And the Maslow's rule is what separates gamblers from professional. So remember, your Maslow's is the percentage of your starting balance, typically 6% or 9 or 10%. It's calculated using equity, not balance. It includes both close and flow-in losses. And once breached, your account is gone. Coming up next, we'll explore the consistency rule and why steady profit matters more than when it comes to growing, scaling, and getting paid.
And if you ever make 5,000 in one day, then make 200 the next 4 days, and wonder why your payout was flat, the next segment is for you.
So let's dive into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
Alright traders, we've talked about the daily loss limit and we just covered the maximum loss through 2 pillars of protecting your capital. But now it's time to shift gears just a little and talk not about risk but also about results. Yeah, because here's the thing, it's not just about staying alive in the game. At WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do that, you need more than just a winning day. It is something called profit consistency.
So this rule right here, the profit consistency rule, is what separates our lucky spy from our reliable traders. It tells us whether you can make money over time or if you are just hoping to one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for profit sharing and even scale up. So if you're funny and you're wondering why your payout didn't go through, that rule could be the reason.
Okay, so let's talk about the profit consistency rule. Let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profits, the lower your ratio. The less consistent, meaning you had one giant profit day and then smaller or losing days, the higher your ratio.
The idea is simple. If 80% of your total profit came from one day, that's not consistency, that's luck or risk. What we want to see is traders who make profit all day after day, even if it's small. That's what we can scale.
And how it is calculated? The formula is really straightforward. Take the best trading day profit and divide it by your overall profit. Change your start with the account and multiply by 100.
Best day divided to total profit multiply 100 equal to profit consistency percent.
And just to be clear, best day prefers your highest close profit in a single calendar day, and total profit is the sum of all your close profit minus any close losses or open losses across the life of the account.
And let's say you had the following result over 5 trading days. Day 1 as 100, day 2 at 200, day 3 minus 50, day 4 100, and day 5 60.
That means your total net profit across 5 days is 100 plus 200 minus 50 plus 100 plus 60 equals to $410.
And your best day was day 2, that 200 profit.
So now we apply the formula 200 divided by 410 equal to 0.4878. Multiply that by 100 and you get profit consistency ratio of 48.78%.
Now let's say your account requires 20% profit consistency, which is common. This trader is way above that, so they wouldn't qualify for a payout yet.
So even though this trader is profitable, they're not consistent enough. They had one big day that made up almost half of their total profit. That's not sustainable, and that's what we're looking at.
And this is where I really want to speak to traders. If you are relying on 1 or 2 big days to carry your entire account, that's not professional trading. That's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. We must trade early your consistency over time. Traders who show long-term balance are the one who get scale up, who get freer, who get just with more capital.
Alright, so let's address the numbers. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your bad day should not exceed 20% of your overall profit. And how to improve your consistency? Let's say you're over the limit. Don't panic. You're not disqualified. You just need to keep trading and even out the curve.
So here's how to do that. First, trade smaller size for a few days. Second, take smaller control wins and for $200 to $300 per day. And third, avoid pick wins trades that could spike your ratio again. And finally, spread profit across multiple days, not one monster setup.
And for those using EAs, monitor your equity curve. If your EA is skewing profits heavily into one day, you might need to rebalance it. The board might be profitable, but it won't pass this rule unless it's configured with payout logic in mind.
And here are some common mistakes to avoid. Mistake 1. Trader hitting target early and they taking rate of the rigor. That inflate your bad day and leave the rest of your curve flat.
Mistake number 2. Overtrading after a big day, thinking I'm safe now, and trying to squeeze more instead of averaging out that high ratio.
Mistake number 3, thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for in our master traders.
So at the end of the day, this isn't about controlling you, it's about building habits that can handle scale. If you can be consistent with $25,000, what happens when you give you $100,000 or more?
Exactly, consistency is what makes you say to invest in. As WeMasterTrade, we're fund trader, but we also study them. It will tell us whether you should learn about long-term trading.
And we've seen it time and time again. The traders who respect the rule, they're the ones who get multiple payouts, referrals, and grow into six figures funded accounts.
So don't fear the rule, understand it, use it as a feedback tool. If your ratio too high, great, that means you got roof it. Now keep going, balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculates your profit consistency ratio automatically. You can check it anytime under your statistic tab.
Okay, to recap, this rule is about balance, not volume. Aim to keep your best day under 20% of your total profit. Spread your wins across multiple sessions and monitor your progress in the dashboard. We walk through the daily loss limit, tackle the maximum account loss, and examine how your profit consistency saves your long-term payout and growth. And now we arrive at the final. So I think it's time to take a look at some important coming news.
Alright, so hello traders, welcome back to our live sessions, and today is Thursday, September 18th. And as you can see, it's a big day back with high impact economic events. Let's go through them one by one and see what's moving the markets.
Absolutely right. We start the day in Europe at 12 a.m. with a speech by Chairman Negro. This speaker often set the tone of the euro, especially when it comes to inflation and monetary tightening.
So then came the big one from the US at 1 a.m. The federal fund rate was released at 4.25%, right in line with forecast but lower than the previous 4.5%. The FOMC also published its economic projections, followed by the FOMC statement and the press conference at 1:30 a.m. These were critical moments. Investors were looking for a signal on how long rates will stay elevated.
Exactly, the market always reacts strongly to the fast tone. Moving on at 5:45 a.m., New Zealand report GDP weakened at minus 0.9%, much worse than the forecast of the minus 0.3% and bigger drop from the previous 0.9%. That's huge low for the NGD.
Japan also had weak data. At 6:50 a.m., car machinery orders plunged minus 4.6%, far below expectation of minus 1.8%. Clearly not good news for Japan's industrial sector.
A trailer followed at 8:30 a.m. with the job data. Employment trend showed a drop at minus 5.4k compared to the forecast of the 21.2k, while the unemployed rate stayed flat at 4.2%. The headline number is disappointing and could be pressure on the Aussie dollar.
Later at 1 p.m., Switzerland posted its trade balance at 4.01 billion, missing the forecast of 5.22 billion. Meanwhile, at 2:10 p.m., we had ECB President Lagarde speaking, which is on with closely watched for clues on Eurozone monetary policy.
At 3 p.m., the Eurozone released a current account at the 34.6 billion, slightly below last month 35.8 billion, but still solid. There were also stranded 10-year bond auction. Total supply reported.
Yes, and at 5 p.m., Germany's Pillar monthly report was released. Then attention shifted to the UK at 6 p.m. with the monetary policy summary and official bank rate decisions. The Bank of England kept rates at 4%, which was expected. The voting results show a 0-1-8 split, signaling a cautious stance.
Later in the US session at 7:30 p.m., we saw an import climb from to 241K better than last week to 63K. On the same note, the Philip Fast manufacturing index jumped to the 1.7, a strong recovery from last month minus 0.3 positive side for the US economy.
And finally, at 9 p.m., Germany Nigel spoke again, followed by the USCB leading index at minus 0.2%, a small decline but not unexpected, and natural gas storage at 80 billion, which was stronger than the prior 71 billion.
Okay, let's go to wrap up. The first house steady at 4 by 25%, but with slightly dovish tone. New Zealand and Japan had very weak data, weakening on NZD and JPY. The Australian report is supported. US data was mixed, but learning positive, especially Charles Clam and manufacturing. The pound was stable, with the BOE holding at 4%, and the euro was sharp by central bank speakers and current account numbers.
Exactly, Helen. And that's today's market rundown. Keep an eye on the Fed signal and US data for directions. And as always, manage your risk carefully. Thanks for tuning in, and we'll see you in the next session.